Hi everyone and welcome to the weekend video. This is May 28th and of course this is the Memorial Day long weekend. First long weekend going into the summer here, so I hope everyone's having a good one. And we had a pretty good week in the markets. Speaking of good ones, we had rallied back after a big sell-off and what looked like a bit of a double bottom there. So let's take a look at the last week's action and then look ahead this week, see what we got coming down the pipe here for potential continuation move here. So let's take a quick look and review what happened last week here, week of May 23rd. We had a pretty bullish week after the sell-off. I will say the volume is not great, and we'll take a look at that when we get into looking at some of the charts on indexes. But on Friday we had a lower number on the CPI. The Fed tends to watch that number pretty closely, and of course it came in a little bit lighter than previous numbers, and so it gave some hope maybe inflation is cooling a little bit off here, and which is a good sign. At least it's starting to move in the right direction, although 1 point does not a trend make. As far as the indexes go, we had a really good week. Dow, Qs, IWM all up 6.5 to 7%. Qs being the strongest. Of course, they were the ones that sold off the most. And areas of strength and weakness, well, pretty much every sector was up on the week. There wasn't a red sector there. Technology, consumer discretionaries, which of course have been the least favored, most beaten up, have managed to come out as strong gainers. Energy, of course, been the big performer for many weeks now. It continued to perform very well. And some of the 10-year note, the yields have dropped off from their highs over 3% on the 10-year, now down around 2.74. 2-year dropped down to under 2.5. So yields trending a little bit lower. And the dollar is really sold off last week. And of course, that's probably good for emerging markets and commodities, a weaker US dollar after that monster run it had. So let's take a look at some indexes here. Okay, so before we get going, as always, I'd like to throw out a quick ad for my book on Amazon, How to Swing Trade, Rules, Routines, Strategies of a Swing Trader that I use. And also, I will be putting out a new book, and it should be coming out this week, so you'll see that featured in my next video probably. So let's take a quick look at some charts here. So we start out with the treasuries as always, and what I was mentioning, of course, is this topping action that we've seen on these yield curves after we saw these massive run up on the 2-year and as well on the 10-year. You can see here we had this big run up as well, and sort of peaked out here at over 3%. Now we are pulling back, which has boded well for stocks, obviously, and I think that maybe sort of people are starting to price in maybe a less aggressive Fed, especially with that interest rate or the CPI number that came out Friday. But again, in the short term, they're still going to be raising rates, and hopefully inflation is going to cool with all these rising prices, sort of demand destruction, as we've talked about. So let's take a quick look at some of the indexes here. I always want to start out with the transports. And you can see here, nice little double bottom pattern that I was pointing out on Wednesday's video. You can see here had a nice breakout Thursday, Friday. We are back up into an area here where there should be some resistance. You can see here support, and kind of a breakout, failed breakout here. So we're back up into this area. So I wouldn't be surprised for us to see at least some kind of a pause here on the transports, and maybe the markets overall, as we'll see in the other charts. You can see here from transports on Friday, again, sort of average volume on the weekly chart. And sort of same pattern on the Dow. You can see here we had a week of every day in the green. Really nice comeback here. We did break through this sort of area that would be, I would consider to be resistance, because it was support here, here, and here. And so now we've broken through that area. Let's just see what happens. But I think there's going to be a little bit more upside. As I've mentioned, the volume has been pretty light, so that's sort of an indication that maybe some of the funds and institutions aren't really participating as strongly as one would hope in this rally. But we do have some nice momentum going on, at least on all the indicators. So Again, I kind of feel like we're probably due for a little bit of, at least the very least, a little bit of a pause here on the rise in the Dow. The Qs again right back up to this prior area of a resistance. Again, maybe due for a bit of a pause after that nice run. We do seem to have put in a bit of a bottom here. I don't know if we're going to go back and test it. But again, sort of same comment on the SPY. We did, as the Dow, we did kind of break through an area that should have been resistance, but there could be some resistance here, and that's exactly where we're at. So again, maybe due for a pause, maybe due for maybe a bit of a pullback after this big run up. But I think this bottom has been put in and probably is pretty solid for now. IWM. Bottom, then a higher low, sort of consolidation pattern here, and then a nice breakout again, kind of coming up into an area where there should be some resistance, this 190 level. Again, some maybe a little bit more upside, but probably some stalling action or consolidation as we digest some of those gains that we've seen. And you can see here, we've really not spiked up on the VIX despite this sell-off. The VIX is kind of held steady, and again, this is a kind of an indicator that not a lot of fear out there in the markets in terms of a real significant correction. I know a lot of people were hoping to see the VIX spike, a real flush down with high volume as an indication that we might have hit a bottom. We have not really gotten that, so again, the VIX is not giving an indication that we're looking for any kind of a big flush here. The dollar really was on a tear right up till to the middle of the month here, May, and then just literally rolled over, came back down, and punched through the 20 moving average, I should say, and now we're down at the 50. That's roughly a 50% retracement from this breakout. So maybe we're going to hang around in this range here, but the dollar really taking a bit of a beating here. Bitcoin is really just trying to hang on here. It has lost this 30,000 level. There does tend to be a lot of volatility on a weekend, especially a long weekend when there isn't a lot of volume, so you tend to get prices pushed around more. But you can see here, big down day Thursday or Friday, I should say. Thursday or Saturday and Sunday we seem to be coming up a little bit, but trend is still to the downside, and you can see that on the weekly chart. Bit of a tried to break out here, and now we've just been trending down again, and again right into this these areas here, 29,300, 28,900. This is an area where we've held back here before, but this 200-day moving average could be the next target if we continue to drop here. Okay, so let's finish off here with a few stocks I've got on watch. I'm going to keep the watch list fairly light. I'm just going to stick with what's working, and that's energy. So you can see here with regard to energy, obviously in this CCJ trade right now, I sort of like, I do like uranium as a possible swing energy play for trying to look for opportunities to get off oil and gas, Russian oil and gas. So this one looks, I think, fairly interesting here. It's got a nice run up here, and I'm sticking with that one. KWeb, Baidu and Baba came out with some pretty good numbers last week, and so I'm looking at KWeb thinking maybe the bottom's been put in here on some of the Chinese stocks. So looking for a breakout here, maybe a possible run up to this 32 level on KWeb. Natural gas, another energy play here. Natural gas obviously broken out, really doing well. Sticking with some natural gas. UPST, this is just an outlier. I guess I'm just looking at this one, possible gap fill here back up to 70 if we can get through this moving average here. And oil, of course, oil's looking really good, continuing to move higher. And way to play that is with holding I've got right now, XLE. This is the Spider Energy Select Sector Spider ETF. It's got companies like Phillips, Chevron, Exxon. It's just a way to play all the big oil and gas companies, oil companies. And the only thing is, again, volume pretty light there on that move. But we are breaking out. You can see here we broke out, checked back, and then have had a really nice breakout again here. Energy continuing to look very strong. So that's it, everybody. So just wrapping things up. As far as the indexes go, I've given you some numbers there for support and resistance levels. I won't go through them by naming them off, but you can take a look at those. These are the areas where I think there are support and resistance. For economic events, kind of light. It is a shortened week, as I've already mentioned. Tuesday, we've got a home price index, Schiller's home price index coming out. Wednesday, we've got purchasing managers index. So those are numbers that people will be watching. Earnings, of course, we've got Monday being the holiday, no earnings then. We've got North American tankers before the market opened Tuesday, HP, CRM, and Victoria's Secrets after the market closed Tuesday, Wednesday Capri, and the ever popular GameStop, which has been on a bit of a tear over the last week, will be reporting after the market close on Wednesday. So that's it, everybody. Again, enjoy the rest of your Memorial Day weekend. Shout out to all service members that serve in the U.S. Of course, this is Memorial Day, thinking about them. And of course, on Tuesday, as usual, we will be starting out at 8 a.m. And in the pre-market show, we'll be live on YouTube. And then after that, trading the market open for our members at 9:30. Hope to see you at all or one of those events. And yeah, have a great rest of the long weekend, everyone. Bye for now.